For decades, it was the unshakable foundation of the global economy. Japan, America's most loyal banker, faithfully buying U.S. debt. But now, that era is over. Japan is doing what was once unthinkable. It's launching a full-scale exit from U.S. government bonds. This isn't just a minor financial adjustment, it's a strategic earthquake, a move that is fundamentally changing the balance of global power. And it's all happening under the leadership of a new Prime Minister, Sanai Takaii, who is steering Japan away from decades of dollar dependence. So, what changed? For years, Japan viewed U.S. Treasuries as the ultimate safe asset. But two massive problems exploded at the same time. First, the sheer scale of U.S. debt, now soaring past $37 trillion, started to look less like an investment and more like a risk. And then came the shock from Washington. The new Trump administration hit Japan with a wave of aggressive tariffs, accusing it of unfair trade practices. Insiders in Tokyo reported a state of shock. In closed-door meetings, officials asked a brutal question. Why are we funding a government that is actively attacking our economy? In that moment, U.S. bonds transformed from an instrument of stability into a source of profound vulnerability. The reaction was swift and decisive. Data from early 2025 showed a massive, sudden sell-off of foreign bonds, over $20 billion in a single month. At first, analysts called it a temporary move. But they were wrong. Under Prime Minister Takai, this sell-off became a formal strategy. The new plan is to reduce the Treasury portfolio by tens of billions of dollars annually until Japan is no longer America's largest foreign creditor. Financial reports now routinely use the term Japan unwind. As recently as 2024, Japan's holdings were over $1 trillion. But by mid-2025, they were falling so fast that analysts began to talk about Japan losing its full holder status, its power to sway the entire market. This is the largest geo-financial shift in a generation. Japan isn't just ditching dollars, it's building a new financial fortress. The new mantra in Tokyo is unacceptable dependence. So where is the money going? The Bank of Japan is buying gold at a record pace, calling it insurance against American unpredictability. Japanese funds are also piling into European bonds and currencies like the euro and the pound. Even the Chinese yuan is being considered for diversification. Major corporations are also spooked, converting dollar assets into euros and Swiss francs, terrified that the U.S. could one day freeze their assets like it did with Russia. But here's the crucial part. Japan is not alone. This isn't an isolated event, it's a leading indicator. According to the IMF, other major U.S. debt holders, like South Korea, Singapore, and Saudi Arabia, are also quietly reducing their dollar assets. The reason is a widespread fear that Washington will continue to use the dollar as a political weapon. At the same time, the BRICS group is actively building its own settlement system to bypass the dollar entirely. The direction is clear. The world is preparing for a future less reliant on the U.S. dollar. This creates a perfect storm for the United States. The U.S. national debt is exploding, and the cost of servicing that debt is nearing a staggering $1 trillion a year. And now, its most reliable foreign buyers are walking away. For 40 years, America could count on someone always buying its debt. That guarantee is now gone. As one Bank of America economist put it, the U.S. has reached the point where demand is no longer guaranteed. So we are left with one terrifying, multi-trillion-dollar question. If Japan and China are no longer keeping America afloat, who will? The global financial architecture is being rebuilt before our eyes, and the fallout is just beginning.